Let's get you the voices which will be joining us on the show today. So Rajat Radkaria, member of, he's a Director Research at Motilal Oswal Securities. Apart from that, Mehboob Nurani will be joining us, he's Principal and Head at PCG of Nirmal Bang Securities. Apart from that, on the charts, of course, Ashwini Gujral, Fund Manager at ashwinigujral.com. Ashwini, I'd like to come to you first. You have not been very convinced on the rallies or the pullback rallies we've been seeing in the market. And it turned out the way you had earlier discussed that we fell very sharply on high volumes. What's the road ahead for Nifty looking at the deep cut we saw in the market today and a very broad-based sell-off?
Without trying to say what's going to happen tomorrow, I think it's fairly clear that the intermediate, the longer-term trend, all sorts of trends are now on the downside. You can easily have a 4-day rally and some kind of respite can come at any time. But today, by breaking 5600, we have opened the doors to about 5400, 5450. And again, the problem is that people are considering that prices today are low compared to 6000. But in a bear market, you will keep getting lower prices till all the selling is done. So there is no relevance of support now, and the only relevance is the previous intermediate top, which is in this case is 5750. Unless we get above those levels and start making a higher top, higher bottom formation, and these levels will come down with time, this market can keep going lower and lower and lower. I don't think saying that X support and Y support will be useful. As you've seen, the moment somebody starts buying, there is more basket selling that comes in. Strong stocks have started cracking now. So I think anywhere that people were hiding will now come under pressure.
Absolutely, and there was aggressive shorting positions also in the bank Nifty as a whole, which was a good pillar of strength. That one cracked by close to 220 odd points in today's session. Mehboob, you heard out Ashwini's view. It's certainly not very optimistic to say the least. How much do you think this kind of selling pressure today resembles the bear market rally that we saw in 2008?
Well, honestly, I wouldn't like to compare the two for the simple reason that if one does the homework well, and possibly the media can do a wonderful job in this, I still see a whole lot of stocks quoting 20% to 100% higher than what they were in 2008 when the Sensex was 21,000. So it's fine to say that the markets are down. It's fine to say that 70-80% of the stocks are quoting much lower than what they were, and the index should be actually 10,000 or 12,000 Sensex, and Nifty should be around 4,000 because most of the stocks have been hammered out of shape. It's true, but there are also a whole lot of stocks which have stood tall, which are given fantastic returns. So what we are advising, what our strategy is, to be patient. Work on the art of compounding. Look at the stocks in your portfolio which are done reasonably well. Look at the stocks in your portfolio which are immune to any type of risk on the political front or the governance front or the pledging of shares issue. I think let's look at individual names like a Sun Pharma, a Lupin, a HDFC, an HDFC Bank, an IndusInd Bank. They're quoting much higher. What stops investors from looking at this particular stocks? When we are discussing the markets, we are discussing mid caps in general, we are discussing small caps in general. We are saying maybe 60% of the shares are quoting below the 200-day moving average. But what about the other 35%? There are a whole lot of stocks which are quoting much higher. The point is, they look expensive. So the strategy now is that sentiment is weak, definitely weak. The index is 200-day moving average. Okay, we have the problems on the political front. We have a Cyprus issue. So we have the negatives in front of us. The fact is, what do we do? Pick up 20 companies, write the prices, I will go and buy at this particular prices. The fact is, don't bother whether Nifty is going to be 5200 or 5500.
Right. Mehboob will come to you with those names of 20 companies which you have actually outlined. But Rajat, come to you. According to you, where could the FI selling stop? And also it is getting quite vicious as we are approaching. Do you think that 5400 or 5500 are the levels that we could see in the near term?
Well, there is really no level in mind where selling will stop, because selling generally is not a function of till what level those sellers would like to keep on selling. It's more a function of events, and I think last 3 months have been very important, because these 3 months have seen a new series of downgrades that have happened from the macro level to the corporate earnings, and somewhere the markets are getting realigned to that. Secondly, we need the effective transmission of monetary easing into the system, because that hasn't happened at all in the last 12 months. While RBI has cut rates by 100 basis points, the bank's base rates have been down by just 20-30 basis points. So there is virtually no monetary easing which has happened into the system. Some of these factors, if they don't change and the downgrade cycle continue, then I fear that there is no level at which the selling will stop, because if people want to sell, if FIs have put in $30-35 billion in the last 15 months, they haven't sold even $1 billion yet.
So then, Rajat, let's talk about a pocket where there is scope for an upgrade, not a downgrade. That's large cap IT, which surprised on the downside once again. But in terms of earnings next week, do you think we could see a big earnings upgrade once again for Infosys?
Well, yeah, in fact, this is one of the exceptions this quarter where almost all the companies in our universe in IT have seen some marginal upgrade for FY14. And this is not driven by any currency change. Our currency assumptions remain stable in a band of 53-54. It's more driven by slightly better top-line growth estimates that we are modeling in. So IT would be the sector which is looking good. Upgrades are continuing in an otherwise environment where downgrades are the flavor of the season. But somewhere I think that is also getting priced in when you look at the stocks, because these stocks have been reasonably big outperformers in the market. I would think that the top line growth assumptions for FY14 are coming closer to what these companies are likely to guide for, at least in the first half of FY14. The further upgrades in the numbers here only come if you see some maybe another 4-5% weakness at the currency level, which at least at this point of time we are not thinking in. So more or less I think the upgrades are tiny, but more importantly there is no downgrade in the sector, which is what is holding on.
Mehrabun would like to garner your opinion on a hot sector in today's session, which is the sugar pack. Today you will have the cabinet, which in an hour or so from now will be discussing the partial sugar decontrol. Now, for a sector that is heavily regulated, how much do you think this proposal to abolish the levy sugar mechanism is going to change the fundamentals?
Well, fundamentals could definitely change if we have a partial or a full decontrol of sugar coming. The question is, should we hazard a guess and find out as to what is going to happen? I wouldn't like to do that. Fundamentally, right now on a weak wicket, no doubt about it. If you look at the production numbers and other things. But the way the stocks have been hammered out, or shaped, Renuka at 25, Bajaj Hindustan at the level at which it is, Balrampur at the level at which it is. Should one have a sugar stock in a portfolio? Answer is, in the longer term, I personally feel Balrampur Chini is a decent bet. But from a trading angle, trying to hazard a guess, too specific, I don't think it would be the right strategy right now in this market. So if I was a short-term investor, I wouldn't look at sugar at the moment.
Ashwini, the stocks in anticipation have always run up, and today was no exception. If they do, have some more leg on the upside, do you think, in the larger scheme of things, they can be good candidate for shorts? Because historically, we've seen whichever sectors have been positively been impacted by policy changes, eventually the stocks actually drift lower only.
There should be some meat to go short on. I mean, 20 rupee stocks, I don't think there is much to short here. They've already been shorted the hell out of them. The place to go short is where, things have not fallen, or which have been rallying over the last many months, which is, IT or private sector banks, etc. I mean, sugar stocks, they go up 4% one day, go down 4% next day. Don't think there is a great risk reward here.
Mehrabun, wanted to know how you would approach then the overall IT basket, which today also succumbed to quite a heavy bout of selling pressure, even the large cap names.
Well, it should be looked at the backdrop of the fact that the IT index has gone up nearly 23% in the quarter ended March. So a great outperformer. So at the present levels, if you ask me, they look overpriced, overvalued for the time being, despite whatever numbers and guidance these companies may come out with. Am I positive on the sector from the longer term? Answer is definitely yes. So I would say that this type of stocks are stocks which have run up quite sharply, which have refused to fall despite the markets coming off. That is exactly what I was trying to assume in my very first answer. That there are stocks which have withstood the fall. Allow them to react, keep them at a particular price, that okay, if Infosys comes at this particular price, I'm going to buy it. If it doesn't come, so what? I think I would wait for a correction of 3 to 5% at least for the frontline stocks. And if anything, I'm ready to buy it as Wipro at the moment for the simple reason that of the 4 large caps, HCL Tech, Wipro, Infosys and TCS, I think it's the most under-owned right now relatively. So I think Wipro is one stock at the present level. I don't mind buying for the longer term. For the others, I would wait for a correction. In the mid caps, we are quite positive on a company like NIIT Technologies. Mindtree, we were positive. Upon up too sharply, we would wait for a correction in that before we make a re-entry.
Rajat, one stock which is almost going towards a bear cycle is the Hero Motor stock, and you track that stock quite closely. And Indian markets seem to be writing an official obituary for Hero Motor Corp. Do you think it's time to think differently on that and maybe allocate some money in Hero Motor?
Well, if I break the arguments of Hero Motor Corp into brackets, all the positive arguments have been with the company for the last 2, 3, 4, 5 years, right? So the positive arguments does not change. The only one new positive argument is that the stock has become fairly attractive on most of the valuation parameters that you see. But I think the most critical question that investors want to know right now are two. First, how much of market share loss in FY14 can further happen to Hero Motor Corp because of HMSI getting more aggressive and launching their newer variants? And secondly, what kind of success story you would like to spin out of the export story that they've just started rolling out over the next 2-3 years? These are some very, very structural, fundamental questions which we cannot find an answer maybe in a month or in a quarter. You probably will have to monitor events closely, and it may take 12 months to get a definitive answer. Till that time, I think you will see shades of outperformances and underperformances. The strong balance sheet, the very strong franchisee caps any downside in the stock from here. But the upside is a function of you getting definitive answers to some of these questions.
Rajat, we'll come back to you in a short while, but Ashwini, your opinion on the Bank Nifty today as well as select banking stocks?
The Bank Nifty, like the Nifty, is on the moving towards the downside. That has also closed for the second day below its 200-day moving average. So broadly, as a target, I think you could look at now 10,600, 700 on the Bank Nifty once we start going below the 11,050 kind of zone. Individual stocks, PSU banks have already been hammered out of shape. Now it's a chance of the large private banks. And I think, that sting operation, that was the trigger which has led to a fairly deep correction, and one that is likely to continue.